Boy, to an end. That's right, because Twitter stock is officially halted on news that Elon Musk is apparently going to propose buying Twitter and proceeding with the deal at the original price of $54.20. That is the full price offer that puts Twitter at over a 70 times PE ratio, based on their actual projected earnings for 2022. It's a very, very expensive deal in this sort of market. I believe that if Elon Musk were not buying Twitter, Twitter would probably be somewhere around $20 to $25 right now. Just look at how much the entire market has really been damaged here. But this news now is leading Tesla stock to at least temporarily sell down. We've had a lot of movement within the day. I'm going to go ahead and show you just the sticks here. So at one point, we were as high as 5.5% up on Tesla following yesterday's disaster. By the way, I bought the dip yesterday. Kathy Wood bought the dip yesterday. People who are serious Tesla investors knew that what happened yesterday was not only nonsense, but actually realistically good for the company at not only preserving margins, but reiterating the 53+% year-over-year growth that we're seeing on production. Obviously, we've got demand concerns. Tesla's been warning about these demand concerns for a while. It's so really, really not a surprise that we saw the numbers that we saw yesterday. But then again, I made a full video yesterday explaining my thoughts of what happened with the Tesla report last week. What happened with the Tesla deliveries over the weekend, and I made that report, that video yesterday. But anyway, now we're getting this news that Elon Musk could potentially be going through with his plans here to buy Twitter at full price. I'm actually a little bit surprised by that. No discount here. That to me is certainly a surprise. I would have expected that Elon Musk would have proposed some kind of negotiated price. And so when the deal was suggested as going through at full price, we did see this move to the downside here, probably about a 4% decline in Tesla stock roughly here. And I believe one of the reasons we see that is because of this belief that Elon Musk still has to raise about $2 billion to completely pay for the deal. Now, it's possible that he could go over to the special purpose vehicle entities that have been established to help Elon Musk finance this deal. Obviously, we've seen individuals who've been interested in investing upwards of $1 billion into this deal to partner with Elon Musk on Twitter. Elon Musk has a massive plan to maximize the user growth for Twitter, potentially 4 to 5xing it, getting to 1 billion users over the next decade, and really being able to actually monetize this platform appropriately. Though he has these internal struggles with how do you monetize a platform while also making sure that you cater to free speech, right? Because free speech begets illegality. It can beget things that are profane and not advertising friendly. And this is where you can kind of get censorship that comes in from advertisers, right? So Elon Musk has a lot of grandiose visions for Twitter. And a lot of folks are actually quite excited about Elon Musk's involvement in Twitter. Though, of course, then you do have those that are further on the left side of the spectrum that have been leaving Twitter because they don't want to be involved in a platform that is potentially run by Elon Musk, and now appears to be more likely run by Elon Musk. So you've got a lot of drama here, but I will say, even though Elon Musk has put up one heck of a fight, I did start having some concerns about Elon Musk's case against Twitter here starting in this summer. And I'm going to give you a synopsis here without getting super detailed here. But first, when Elon Musk argued, hey, I feel like I'm buying Twitter, and I'm being told it only has basically like a house 10% termites, but what if it actually has 75% termites? Now I'm buying a termite instead of buying a house, right? I've been misled with how many bots there actually are on Twitter. And the big counter argument that has been really difficult, in my opinion, for Elon Musk to overcome is this idea that, well, did Twitter actually mislead you? Because in their SEC filings, they basically said, look, we did a random sample and probably did a terrible job at it, right? But we did a random sample and we think there are about 10%, no more than 5 to 10% bots on the platform. And this random sample doesn't necessarily rise to the level of being a fraudulent misrepresentation, because it would really be no different than a seller saying, hey, look, I'm not a foundation expert, I think the foundation's fine. And I only think that because I walked into the first bedroom of the rental property and the tenant never complained to me. And then I walked out, right? And then if a buyer goes in and does a foundation inspection, and then over by the kitchen, they find out the entire foundation is sloping away and it's falling 6 inches and it's crumbling. And the buyer's like, hey, I'm going to sue you for fraudulent misrepresentation. You told me the foundation was fine. The buyer or the seller's response would obviously in this scenario be, no, I told you that I did a very poor sample of how good I thought the foundation was by walking in the front bedroom, and we guessed it was fine. But we're not foundation experts. We didn't really actually do a thorough and detailed inspection of the entire platform or property in this case. That's your problem. That's on you. And unfortunately, Elon waived due diligence. After his initial diligence, he waived any further in order to commensurate the deal, essentially. Now, I did tweet the following before I'll explain. I did tweet the following. I say, some say Elon Musk has to buy Twitter as is because he, quote, waived his rights to due diligence. Now, then I wrote wrong, and this is actually still true. I'll explain this. I wrote Section 10b-5 of the SEC's codes, right? Twitter can be liable for omissions of or misleading material facts. Waiving due diligence does not mean you have to accept a fraudulent disclosure, understated bots, right? And so Elon Musk actually replied to this twice. He replied once in June and wrote correct. And then he replied again and said exactly 1 month and 13 days later. So he's really, really interested in this section here, right? But here's the problem. Who says that Twitter omitted? Well, they didn't. They said, hey, look, we did a random sample and it was, 5 or 10% bots. So it's not an omission. And they even said, hey, we could be wrong. But then you also have this idea, could it be misleading? Well, this is what you have to argue. If they told you, like that bedroom example with the foundation, hey, we only walked into bedroom number 1 and we did a really shitty inspection and we think it's okay. Is that misleading? Or are they actually being honest and like, hey, we did a really bad inspection and we think it's okay? That's not misleading. And that probably doesn't rise to the level of fraud. So this is where I started realizing like, crap, like Elon's probably screwed. He's probably going to have to buy Twitter. And if you go back and look at my Elon Musk versus Twitter videos, you'll actually see that, especially when I was using the black screen, which, by the way, the black screen is going to be making a comeback soon. We've remodeled that property and turned it into our house hack office, which is really cool. But it's been very, very dusty since then. So, but yeah, that property is now finally clean. We'll be bringing the blackboard back. But yeah, by the way, if you're an accredited investor, remember, househack.com is calling your name. We've raised over $30 million, almost over $30 million in under 30 days, which is very exciting. And we're going to be buying the dip in real estate in 3 to 4 different markets throughout the country so we can diversify real estate exposure. And accredited investors are invited to upload a proof of accreditation through InvestReady is whom we recommend. That'd be househack.com or househack.investready.com. Or you can upload a CPA, broker, or attorney letter or your W-2s or 1040s. If you're not accredited yet, stay tuned. We expect to bring that to non-accredited investors in January. But read more about that at househack.com. This video is not a solicitation. The website is. But anyway, moving back over here, it's so important to remember that a business is not a fraud because it sucks, right? It's so common these days for people to just say, oh, you're a fraud, right? Like about a company. And so people are like, oh, Twitter has more bots than they suggested they had. They're a fraud. Well, not really, because when you look at the actual legal element is, well, did they mislead you or did they lie to you? And if they bluntly told you, we did a really shitty inspection, we think it's 10%, but we could totally be wrong. Well, that's being honest. That's transparent. It's not misleading. And it, in my opinion, wouldn't rise to the level of fraud. So that made me concerned that Elon Musk had a pretty weak argument for being able to, basically renege on this deal with Twitter. And he's also doing this in the Delaware Chancery courts, which are extremely pro-business. And the Delaware courts, this is another issue that you have to remember. The Delaware courts, they do not want to be known as courts that just throw up their hands and tear up contracts. Because if they do that, they create a legal precedent that, oh, the Delaware courts, if they don't like your contract, they'll just tear it up. Like, people incorporate in Delaware because, or Wyoming's another popular one, because that's where you want to go to a business court and have contracts adhered to. It's not like in California, where you could have, like, just as an example, you could have a contract with a tenant and it's like, if you don't pay, you're out. And then you get a judge that's like, oh, well, they lost their job. We feel bad for them. They get to stay. Like, that is not Delaware, right? Delaware is like, this is what the contract says. And so you would really have to find something that was not only fraudulent, but also probably rose to the level of fraud that would impact the company's financials materially to the tune of probably over 50%. And I don't know that even if you had more bots here, and even if Twitter was off by a magnitude of 10x, maybe they're 50% bots instead of 5% bots. I don't know how much we could say that's really going to actually affect the income, because it's like, well, like, how much are bots actually being advertised to? I don't know. Who knows, right? But anyway, a lot of that also goes back to the legal precedent. Back in, I think it was 2002, Tyson Foods, during the .com bubble, agreed to buy another meat manufacturer, and the market value plummeted because the market started crashing. And then Tyson Foods like, yeah, we don't really want this company anymore. The Delaware courts forced Tyson Food to buy the other meat manufacturer. Forced. Like, that's a big deal. That's huge precedent. So you have this legal precedent you have to get over. You have to get over the fact that it doesn't actually seem like there was an omission or material misstatement or fraud. And so even with all of this discovery that's coming out and leaked Elon, court documents showing his sort of communications with the CEO and Parag and other folks, doesn't seem to matter, because it looks like Elon's probably going to be coming out here and buying Twitter. Now, the actual news is Twitter stocks jumping. Twitter was halted after report says Elon Musk is going to propose buying Twitter at the original offer price. Two parties have been locked in a legal battle since April. That's actually wild to think this has been going on since April, but I guess it has been going on for a while. Twitter shares were up as much as 13% right before the halt. Let's see how they're doing right now. Pretty remarkable. By the way, the platform that we're using here is Webull. If you want to get up to 12 free stocks with Webull, you could do so by going to metkevin.com/Webull. But you can see here, Twitter jumping. Oh my gosh, look at that gap narrow. We went from about $42 here on Twitter to $49.99. Right now sitting at about $47.95 before the halt here. That really compresses this. I mean, if this is trading for, say, $50, and we think we're going to get to 54.20 divided by 50, that gives you still an 8% arbitrage here. But this is like algos right here instantly buying this up. And they're good. I mean, they got in right before the halt, which is really, really incredible. Again, still talk that potentially Elon Musk has to raise up to $2 billion more. So that is why you are seeing some decline in Tesla stock. $2 billion divided by the current Tesla share price could possibly be another 8 million shares of selling pressure. And so you are seeing some pressure on Tesla. We're down about 3% now from where we were earlier. Still green on the day at about 2.3% to the upside, but definitely down from where we were earlier because of this news. And look, 8 million shares is quite a hunky-dunky chunky. Let's take a look at our volumes that we have here. So we sit at, on the day, so right now we're sitting at that'd be about 1/8 of the daily volume, sitting about 60 to 70 mil. So 1 divided by 8, that'd be about 12.5% additional selling volume. So certainly going to create some more selling pressure. I believe that Elon Musk right now is in lockup until October 19th, so we can't do any selling now. But I believe he's in lockup until October 19th because that's when earnings is, or the earnings come out, the actual earnings, and not just delivery numbers. And so that's generally deemed the blackout period during which no trades should be made. Okay, let's see what else we can find, if there's anything else. This has been pretty thorough already. So it doesn't surprise me that Elon is going to go through with the deal. What does surprise me, though, is that I really was expecting Elon to come in and suggest, hey, can we do the deal at like $50 or something like that, right? So you might still see somewhat of a discount on Twitter because of that potential expectation. Musk made the proposal in a letter to Twitter, apparently. So apparently the letter's already been made, according to people familiar with the matter. Shares in Twitter climbed as much as 18% on the news and then got briefly halted. I think it's still halted. Musk has been trying for months to back out of the deal he signed in April. Musk began showing signs of buyer remorse shortly after the deal was announced, alleging that Twitter had misled him about the size of the user base and the prevalence of bots. Musk formally quit the accord in July, and then they kind of go into which we've already described, the burden that Elon Musk has to overcome of proving that there was actually fraud or misrepresentation. And again, this is probably the most important thing. Sucking is not fraud. Like, just because your company sucks at doing your own, like inspection, so to speak, on your users and actually determining how many bots there really are is probably just bad business practice, but does not mean you are a fraud. So, it looks like DWAC is getting hit. And remember, Cathie Wood bought the dip with about $32 million yesterday on Tesla. Tesla now down to just 1.8% to the upside. Let's look at DWAC. Oh my gosh, DWAC is it's actually at $17. You know what's really remarkable about this is I went on I know people hate it when I say it, but it's true. I went on Newsmax when this thing was like $140, somewhere around here. It was like, oh, it's even off the charts. It was like $140. And I'm like, this sucker's going back to $10. And they kind of got mad at me. Like, they were shocked. They're like, what? What do you mean $10? It's $140. Like, it's going back to $10. And look at it. It's at 17 right now. Like, oh my gosh. I should have held my shorts. The problem is shorts get expensive, especially when they're hard to borrow. The fee you pay gets expensive. But anyway, that would have still paid off. NASDAQ now rotating down slightly in the day here. Tesla, again, you could clearly see that hit here. We got rejected at the 23.6% Fibonacci line, which is about that 255 level, multiple times here. I mean, look at these algorithmic bounces here. Bounce, bounce, bounce. We tried to break out a couple times, couldn't do it. And sure enough, when we got rejected, or sure enough, we definitely got rejected when we got the news about this potential deal going through. Take a look at our bounce over here on the NASDAQ. This is the QQQ. Barely going under that 0%, the old 0% fib line. I might have to move that down slightly a little bit. Twitter now still halted, but expecting this deal now to go through at 54.20. Again, it does not look like the lawsuit. And some of the early rulings as well have just not gone Elon's way. It's kind of been one of those disappointing things that I haven't actually covered as much as I used to cover, mostly, and I'm reading about it, but mostly because it's been quite disappointing. Like, it just seems like Elon's been getting reamed with the courts. But then again, so far, you can't terribly blame it because, again, just because Twitter sucks as a business does not mean they're fraud. So I'm going to do a quick little tool check here. Doesn't actually look like there's anything really terribly interesting beyond this news. Looking at Bloomberg and Wall Street Journal here. A little update from the Wall Street Journal. Let's see what they have. So apparently this letter was sent overnight to Twitter. Let's see what details we can get here. Of course, the Wall Street Journal has signed me out again. Fear not. We will sign in. Oh, all I had to do was click sign in, and I can't. All right, here we go. So here's the Wall Street Journal piece on this. Elon Musk has offered to close his $44 billion deal of Twitter on the terms that he originally agreed to, say people familiar with the matter. Billionaire's lawyers communicated the proposal to Twitter lawyers overnight Monday and filed a letter confidentially with the Delaware Chancery Court ahead of an emergency hearing. You know, this is actually interesting because this also comes after Elon Musk and the CEO of Twitter both did not go to their depositions. They rescheduled their deposition like the day before the depositions were supposed to happen, and both of them rescheduled it. And so people were like, oh, do they have a negotiated deal? Like, is this coming to an end? I would not be surprised if this is actually a deal. This is now my speculation. I want to be very clear about that. I don't think Elon would send a formal letter, and Elon's attorneys would send a formal letter to Twitter unless either it was part of like the gamesmanship. Like, what if this is part of this? This is another theory. Okay, well, two things. One, what I think is more likely is I think they've already verbally agreed. Let's just get the deal done. Let bygones be bygones. Let's let the deal be done. Elon comes in, fires a bunch of the executives, and runs the company the way he wants to. Right? That's one potential. There is another potential here, and it's a little bit more sinister. But basically, when you send a formal letter, you can potentially, in court, you send a formal letter saying, okay, let's just drop everything. We'll go back and we'll keep proceeding with the deal. It's possible that the other side then says, you know what? No, we're going to keep this lawsuit going because now we want more, or we want damages or whatever. And if the other side rejects that full price offer, they can oftentimes waive any damages below that offer. Like they lose the right to any of the benefits below that offer. Now, I'm not an attorney, so it's not legal advice, but there is a sinister ulterior motive here where potentially you submit this letter, and if Twitter now rejects it, they lose the ability to argue that, well, now the deal's closing at $30. We want to sue Elon for between $30 and $54.20. And Elon's like, dude, I sent you a formal offer to just go through with it at $54.20, and then you rejected it, right? That is a more sinister potential option. No guarantees, but that's a potential. So in my opinion, either the deal happens now, which is possible. And I would say that's probably likely. I would say there's an 80% likelihood that at this point, especially since both sides paused their depositions, there's probably an 80% plus likelihood that this Twitter deal goes through and this formal letter is just a formality. I'd say there's a 20% chance that this is just an offer that Twitter now rejects. And then Elon Musk says, great, you've just waived your damages for anything below $54.20. Kevin, I'm not an attorney. 2 weeks later, just passed the bar. That's funny. That's a good one. Obviously, a reference to the financial advisor license. Okay, very good. Very, very good. The Democrats already stated that they don't like the Twitter is going to Elon. Well, yeah, I mean, do we need to talk redundancies? Anyway, all right, folks. Thank you so much for being here. Love y'all as usual. Check out HouseHack. Go to househack.com if you're accredited. If not yet, stand by. But you do get the most benefits the sooner you join. You get up to at this point, I think we're 60%. It's all on the website, but 60% warrants, which is basically like a free call option that you get on the company. It's a little different. It's not a call option. It's different, but read the PPM and you'll understand the details exactly. Thanks so much for being here. We'll see you soon. Bye.